does look like Alibaba getting aggressive in fighting for its own turf.
No, absolutely. But my sort of initial reaction on this is sort of here we go again, because Alibaba tried this strategy last year. And when they reported their year-end numbers, their cloud growth or cloud intelligence growth for the fourth quarter was up in the low single digits. So it's a strategy they've tried before, as others have, and I think the evidence speaks for itself. To be fair to them, though, what other choice do they have at the moment? They're trying to stimulate growth within this business. So in order to increase their share or drive their business, then price cuts is an obvious way to try and do that. But going into a slowing economic environment, I'm sceptical that this is going to deliver material results to them.
So what should be the follow-up action? I mean, a price war doesn't always work well, like you said.
Yeah, and the China tech sector is sort of notorious for these. You think China, for example, is the global leader in solar panels and LEDs, but as a result of too much capital going into those sectors in previous years, they're all loss-making, or they certainly were loss-making, or making very low levels of profit. So I think there are parallels to be drawn with the cloud sector here. Absolutely. Yes, trying to stimulate growth is what we're going to do. I think the only other option available to them, but it's obviously not their decision, would be some sort of government stimulus coming in to try and stimulate growth within a sector that's sort of key to building out the national infrastructure, etc. And that's something we possibly might hear on next week with the MPC reporting in Beijing.